What's going on, guys, and welcome back to the channel. I'm finally back here with another video. It's been a long time, but it's fine. The platform is finally done. It's been probably like a month, to be honest, even more. The platform actually doesn't look that much different from when I last made a video, but I promise there's a bunch of new cool stuff, so let's get through it. So first of all, this platform is now free and out at this link. It's now out for testing. It's free for now. It's gonna be free for a while, so please do check it out if you wish to do so. And also, since it's not yet complete and the settings tab and everything else is not yet completely finished, please do put all the bugs that you find down in the comment section. And also this link will hopefully be in the description if I don't forget. So now we are going to be doing a analysis of PayPal. This is a very last minute analysis, and I was just away, so I couldn't make it, but we're back, so I'm just going to be making this right now. So as you can see, PayPal has fallen about 80%, which is amazing. However, I'm going to be telling you guys what, actually at its bottom it's 82 almost, but I'm going to be telling you guys why I don't think PayPal is a great investment right now, because I still think, or I still believe that it's pretty overvalued, but I guess we'll see and find out in this analysis, so let's get right into it. So first of all, let's look at the growth. So in the profit margin chart, you can see that PayPal doesn't have the best profit margins, but it's above average and it's pretty good. If we do not look at the last year has been rough for PayPal, as you can see, and the margins have gone down because the revenue has gone up and the earnings has gone down. So pretty bad year for PayPal. But what I love about this company is their free cash flow. And their free cash flow margin, because that is at a very stable 20%, and that's just amazing. And it's even growing. It's growing at a great steady pace. The revenue also has some very good growth. But anyway, let's move on to the valuation. So the PE and 5-year PE is not yet here for 2022, but it's fine because we can do the analysis without it. I believe that the PE right now is about 17. So if we just add a pillar at like 17 right here, that'll be fine. And so you can obviously see that PayPal is very undervalued compared to the last a couple of years, because you can see that the average PE of PayPal was like here, 30. Right now it's 17 point something. So very good numbers for PayPal right now. So let's look into the enterprise value, and this is what I found amazing about PayPal. So they don't have any debt because they have so much cash and free cash flow. And as a result of that, look at their enterprise value to free cash flow and earnings. It's even lower than their price to earnings, which is amazing. Also, look at this percentage of current assets. It's literally, it's huge. So it's about, on average, 75%, which is extraordinary. I have seen, let me count, 0 businesses with this kind of percentage of current assets, and it's really stable too. Like, it's been hanging around this percentage for a long time. It's even gone up in the last year. And what this means, guys, the percentage of current assets is the percentage of their assets that are sellable or like tangible. That means, for example, an example of a current asset is cash, because cash can be used immediately compared to something like a building, right? You can't really do anything with a building. However, you can do something with cash, or like a short-term investment, something like that. What this means, guys, is that they have a lot of cash to their disposal, which is amazing. Also, this is kind of a spike of market cap because look at this. So the market cap was so low back here, and then it just kind of shot up by what is this 150%, and then went back down. It's even lower right now, and the book value is actually really great for PayPal right now. So really enjoying that. But anyway, let's move on to this chart, and you can just take a look. This is the market cap compared to the earnings and revenue. But now let's go to the health. And this is what I've been talking about, guys. So the cash compared to their debt is just amazing. The situation is completely under control. They have twice as much cash as debt. And actually, that's after the debt grew in these last couple of years. Before, they had no debt, or like only a billion. So, pretty great situation with debt. And the free cash flow is also growing really fast. So, shares outstanding, nothing too great here, but nothing bad either. They're buying back, so it's amazing. So, assets and liabilities. This is a standard situation where the assets and liabilities are going up, so nothing to say about this one. And look at this actually division of current assets. So they have a lot of short-term investments and a bunch of cash. So which I really love this, and their long-term assets are basically negligible. So you can see they have a lot of goodwill and intangibles, but nobody really cares because only about 20% of their assets. This is nothing, just like some assets payable, and then their long-term liabilities, basically nothing there. Let's now move on to the ratios, and this is the breaking point of PayPal. So until this point, PayPal looked like an amazing buy, but the ROA, return on assets, and return on invested capital in this, on this company is just how is it so low? Seriously, their ROA. Look at this, guys. It's what is this? It's nothing. It's like it's not even there. They have so many assets and not that much. Not that their earnings are very low. It's just a catastrophe, guys. Look at this ROIC. It's barely there. Like their highest ROIC in the last 10 years was not even half a percentage point. Like that's actually insane. That's just insane. But they don't pay a dividend. I don't know why that's there. I have to fix that. See, that's one of the bugs. But anyway, so investing and financing cash flow, I don't really care about that right now. And you can see that they have made some acquisitions in 2020, actually. So you can see that right here in the investing cash flow. But anyway, so in the forecast, this is where things come back. Well, basically turn back to the good side again for PayPal, because look at this forecast, guys. It's just amazing. And this is probably because PayPal is just such a great business model. Like, everybody wants to just transfer cash like that, right? So nobody really uses, like, banks to transfer cash anymore. All the smart people just use services like Venmo and PayPal, of course, to do that nowadays. So great assumptions for everything. Forecast earnings great, and margins are also on the climb, or predicted to be on the climb. And we'll have to consider this in our analyzer, but or in our calculator. But anyway, so first of all, this can be delusional. So do not rely on these auto-generated metrics. They're just the 5-year average minus a margin of safety of like 15%, and then to each side they're basically just here minus 20 and here plus 20 or something. These are auto-generated, and you definitely shouldn't rely on these. And actually, I'll be changing them drastically. So I'm gonna go in with a revenue growth of 5, 7, and 9. It seems pretty high, but for PayPal, it's actually not that high, especially considering their last year's. And actually, my monitor just turned off, which is amazing. Jeez. Okay, I'm back. So for the people that think it's too high, just look at this. I mean, their 5 year and 10 years just absolutely amazing, and they're still doing pretty well in their in the last year. So I don't think this is high at all. And for the people who think it's too high, uh, I mean, I am trying to be conservative here with 579, but you can do lower if you wish. But for the profit margin, I'm actually gonna go a little higher, just because of the last year. It was very bad. And for the free cash flow margin, I'm gonna go a little lower. For like many users. And then for the PE, I'm just gonna go like completely down. I'm gonna go 15 at the best, and then 17 and 19. I actually think this is still too high, but even with these metrics, you can see that it's still not the best buy, even with these pretty high metrics. Like if I was to do a little more conservative P, like start at 13, this would be a catastrophe. So, I mean, I'm not gonna buy PayPal. If you think it's a good investment, you can do it. But the main problem for me here is, these are the middle assumptions, right? That's the result of the middle assumptions. And if the estimated price return is 10%, if I buy it at the current price, I mean, that's just not for me. If the high assumptions were true, then it would be a very nice 14%, but I don't think the high are going to come true, and it's just too much risk with the earnings not coming, with basically not tripling. so yeah, I mean, also their free cash flow is much higher than their earnings. I'm gonna add it to my watch list at around 50 or something. So yeah, that's probably when I'm gonna buy it, at around 50. So yeah. Anyways, guys, I am planning on adding multiple more things to this website, like for example a retirement calculator, and of course the statements. They're not here yet, but I will add a income statement, balance sheet, and cash flow statement, maybe some other ratios and stuff. And then definitely a retirement calculator and other cool stuff. So make sure to subscribe and like this video, because I have actually put in a lot of effort into this website, and it's free right now, so just you can go to this link. I'll make sure to leave it down in the description, and of course if you like this video, you know what to do. But anyways, guys, I hope you enjoyed, and I will see you in the next one.